All right, let's get straight to it. Chevron's third quarter, well, it's a bit of a paradox. You've got record production and a mountain of free cash flow, but somehow earnings actually went down. So what's the real story here? In the next few minutes, we're going to cut through the noise and give you the essential numbers and what they mean for you as an investor. Okay, first things first, production. And wow, Chevron just smashed its own record, pumping out nearly 4.1 million barrels of oil equivalent per day. That is a massive 21% jump from last year. We're not talking about a small bump here. This is a whole new level of scale for the company.
And all that production, it turned right into cash. A cool $7 billion in adjusted free cash flow, to be exact. Now, for us investors, this is the number that really matters, right? It's the cash left over after they've paid to keep the lights on and grow the business. It's the money available for us.
And what did they do with that cash? They gave it back to shareholders. We're talking $6 billion this quarter alone in dividends and buybacks. So the big question is, how did they pull this off? And more importantly, can they keep it up?
So that record production, it really boils down to two main things. The huge Hess acquisition finally kicking in, and some really strong performance from their own existing projects.
I mean, just look at the jump on this chart. We're talking an increase of more than 700,000 barrels a day compared to last year. That's not just a good quarter, folks. That's a fundamental change in how much oil and gas this company can produce.
Okay, let's break that down. Yeah, the Hess deal was obviously the big kahuna, adding almost 500,000 barrels a day. But here's what I find really encouraging. They also got a huge boost from their own assets, the Permian, Tengiz, the Gulf of America. That tells you the core business, the original Chevron, is absolutely firing on all cylinders. All right, so we've seen the massive production. Now let's follow the money and see how that turned into cash for investors. It all starts with this number, almost $10 billion in cash flow from operations. And here's the really impressive part. They did this even though Brent oil prices were about $10 a barrel lower than last year. That screams efficiency and tight cost control.
So you take that nearly $10 billion in operating cash, and then you subtract the money they had to spend to keep the business running and growing. That's about $4.4 billion in capital expenditures. And that leaves you with that beautiful $7 billion adjusted free cash flow number we talked about earlier. This is the surplus, the cash they can use for dividends, for buying back stock, basically for rewarding shareholders. And here's how they sliced up that pie for us. $3.4 billion went straight to dividends, and another $2.6 billion was used to buy back shares. Every share they buy back makes your own shares just a little bit more valuable.
Okay, but here's where the story gets tricky. We've got record production, tons of cash, so earnings must have been through the roof, right? Well, not exactly. Let's dig into why.
Believe it or not, adjusted earnings actually fell compared to last year, and the culprit is right here. Lower oil prices. That wiped out almost $2.5 billion from the bottom line. It was such a big hit that even fantastic results from their refining business and all that extra volume just couldn't make up the difference. So the big takeaway is this. All that record-breaking production still wasn't enough to protect profits from weaker oil prices. It's a stark reminder that even at this massive new scale, Chevron is still very much tied to the ups and downs of the energy markets.
All right, so where do we go from here? Let's take a quick look at what the company's telling us to expect for the fourth quarter and the big question this leaves us with.
So looking ahead to Q4, they're flagging some planned maintenance that'll trim production by about 125,000 barrels a day. No big surprise there. But the good news for shareholders, they're keeping their foot on the gas with buybacks, planning to repurchase another $2.5 to $3 billion worth of stock.
And all of this leaves us with a million-dollar question for anyone investing in Chevron. Is this huge production growth a new normal, a higher, more stable platform for generating cash year in and year out? Or was this quarter just proof that no matter how big they get, their fate is still tied to the whims of volatile energy prices? That's really the core question you have to answer for yourself going forward.